Yes, it's a very interesting one because we've obviously got very high rates for the Bank of England. The market pricing are near that 6% mark, and that's been a support for the pound on many crosses for a number of months. But we've also seen the occasion where there's been new information, such as a high wages number, that has increased the probability of higher rates, the Bank of England doing more, but the pound hasn't necessarily benefited from that because it obviously increases recession risks that the Bank of England will have to go harder. So it's had a good run. We're not super bullish at this point. We think it's at these sorts of levels would probably be prefer to be on the short side, particularly with that sluggish growth and that huge current account deficit still. So I think it'll probably be a difficult period for the pound, particularly if we get a hawkish Fed next week.
Do you agree with the shift that we have seen in terms of market pricing from the BOE? Do you think that they might not go to 6 now? Because I would imagine that even though you did see a little bit of improvement below that 8 handle, that when inflation's running at 7 plus, you've got to really take it to task in terms of the rate settings.
Yeah, I think so. I think that's 6% is probably still the most likely outcome. When, as you say, with inflation is still one of the highest in the major countries, and yet they've got a 2% target, and they have to keep sending those letters to the Chancellor of the Exchequer to explain why they keep missing. So I think there probably is quite a bit more to come in terms of tightening. So the markets will debate whether it's 25 or 50 at the early August meeting, but you've got to see a much more tangible improvement in core inflation than we saw at this week's update.